All right, guys, welcome into the CISD presentation. Those of you that don't know what CISD means, it is basically change in the state of delivery, okay? This is used as a confirmation tool. This is not to be pattern traded. This is just used as a confirmation tool, right? Once you have the narrative and framework behind like the weekly chart, the daily chart, this becomes a very powerful tool for confirmation, okay? And I'm going to be breaking down some of, some daily framework. That way you guys could use this to your advantage, in the coming weeks and stuff. So CISD, let's get down to the basics of CISD. I'm going to be breaking down the one to the left over here. So CISD can come in these two forms. It'll be a singular down close candle or a series of down close candles. So the first one to the left over here is a down close candle that reaches into a discounted PD array or key level or an area of interest that you are anticipating a reversal from. So you will oftentimes, in this example over here, you'll oftentimes have a singular down close candle coming into that area where you're expecting a reversal from. And once we have a bullish candle close above the high of that down close candle that reached into that area where you're expecting a reversal from, that becomes a change in the state of delivery. So you can see we push up and then we revisit that candle's opening price right here. So you want to mark out the opening price of that down close candle and extend it out in time. And you can see here it is a sensitive area for, CISD or order blocks, right? AKA CISD is order block formation. That's what it is. Okay, so you extend the opening price out of that down close candle that reached into that area where you're expecting a reversal from. You extend that out in time. You can see it taps it, and that was the only tap that it got, and then it ended up pushing higher. Okay. Now, the one over here to the right is a series of down close candles. So, again, same thing for over here. You want to watch price action reach into that area where you're expecting a reversal from, and that can come in a liquidity sweep or, a higher time frame fair value gap in a discounted, it has to be a discount. Mainly, this is where your change in the state of deliveries are going to come from, is discounted PD arrays, discounted key levels in a higher time frame range. Okay, so we come down, we reach into that discounted area, we sweep liquidity there, and you could see a very nice reaction off of that, and we close above the opening price of the series of down close candles, of this first down close candle in the series of down close candles. Okay, so you mark out the opening price and you extend that out in time, you get a double tap, and then the move starts there. Okay, very important that you get a body closure above the high that starts, that down close candle movement, the series of down close candles, excuse me. You want to get a body closure above that. So very nice close, and then another very nice close following that. So that confirms that this is our change in the state of delivery, and we should be paying attention to this one as opposed to the one on the bottom, right? When we have a series of down close candles, you always want to pay attention to the first one in that series of down close candles. This can be 2, this can be 3, this can be 4, this can be 6, okay? Just something to know. Now, for the bearish example, it's the same thing, right? We have a singular bullish candle reach up into our area where we are expecting a reversal, and this can be a premium PD array or premium key level, and we want a closure below this candle's low. We get it right here. So anytime we revisit that area, that opening price of this bullish candle that reached into a premium area where we are expecting a reversal from, you can use that as an area where you are wanting to sell. And if you were to mark out your fib from this high to this low before we started retracing, or when we started retracing, this is a premium, right, from right here. So you could use this with, you could sell from here with more confidence because we are in a premium of this little dealing range right here. Now, the series of up close candles, this is another example, another bearish example of a CISD. You can see 3 bearish consecutive up close candles. We reach up into an area of interest or, a premium PD array, premium key level, and then we have a nice reaction off of it. And we close below the opening price and that low, that cent price to push up there, okay? Now, when we revisit this area, you can use it as a point of selling, right? You can go short right here, and you can see a very nice reaction off of that. And I wanted to include this right here, these 2 candles, because sometimes, or some of you may ask, why not use this candle right here? Because this candle, right, got disrupted by this bearish candle right here. So we'd only pay attention to these 3 candles right here. That's why I wanted to include these 2 candles, because some of you might be like, why aren't we including this one, right? Because it's a series of up close candles, but it's not, because we have it disrupted by this bearish candle. So we would pay attention to these 3 right here, okay? So let's go to the chart so I can break down the daily framework, and then, yeah, we can break that down. So let's go to the charts. All right, so here's the daily chart where everything starts from. So shout out AM Trades. I just want to shout him out real quick because in his CISD video, he broke it down really, really nicely. And it's a video that I watched a while ago. But he pretty much broke it down from like consolidation on a daily time frame, which is what we're going to do too, is consolidation and then a reversal and then a retracement to go lower. So we're going to be breaking down these three conditions in the market off the daily time frame, and you will see how CISD really confirms a lot of these. It confirms that the market is changing and it's reversing, or it's using it as a retracement to go lower, or you could use it in consolidating markets as well. So we're going to start right here. So let me go and play that. All right, so if you look at the daily time frame here, right, and you mark out your fib, you mark it out from this low. Why this low? Because this low produced this swing high, okay? This swing low to this swing high, that is our range on the daily. It is not from here, okay? It's from here because this is a swing low that was made to push the market up to here, okay? Use this fair value gap to push the market all the way up to here, okay? So we reach into a discounted what? Daily fair value gap, and we have what? We have equal lows right here on the daily chart as well, okay? So you could see that we have reached into an area of discount on the daily time frame. So if we go to the 1 hour now, you can see how we have swept these equal lows right here. And now what we can do here is, this is obviously the end of the day here on a Monday. So we can start zooming in into Tuesday's price action. So you could see here that we reach into that area of discount on the daily time frame, and we have swept that previous day low, which was Monday's low right here. We sweep it at a key time. So those of you guys studying daily profile, this is very important because we start on the daily and then we go to the 1 hour. Remember the time frame alignment that I talked about, I think it was on Wednesday when we were live, daily candles or daily POIs, you'd go to the 1 hour to find your change in the state of delivery, right? So you could see here, 2 down close candles. I just noticed this is the same example I used in the presentation. But all right, fuck it, we'll just go. So yeah, series of down close candles. We reach into an area of discount on the higher time frame. We have swept the previous day low. Very nice reaction, and we get a closure above the first candle in the series of down close candles. You guys see that? We tap into it. And then I think we tapped into it again, right? Yeah, so 9 a.m. taps into it again. So this is when we can start going into like the 5-minute time frame and start, looking for a CISD on the 5-minute time frame for our intraday trading, okay? So you can see here on the 5-minute candle, we come down and we tap into that 1 hour key level at 9:30 because 9:30 manipulates us lower, and then these two candles close above this down close candle that taps into that 1 hour CISD. So this becomes our CISD on the 5-minute. So we get a tap right here. And notice we have a series of down close candles. So you can mark this out. If you aren't like confident in taking something like this with this type of structure in intraday, trading, when you're in the live markets in New York session, you're not really comfortable in taking something like this because we just got a liquidity sweep up here off these relative equal highs. You can mark out the first candle in the series of down close candles, which is all the way up here. So once we get a closure there, you can set a limit there. Okay, so let's see what happens. Okay, so we got a closure above that. So this can also be used, just like this one was used. Okay, so you could set a limit here, and let's see if we get a tap into that. Okay, we didn't get a tap into that. We've swept liquidity here. So we didn't get a tap into that. Let's see what happens for the rest of the day. Oh, yeah, we did get a tap into that. Nice. Okay, so see, you could use this for even later in the day because all this price action here is intraday price action, right? We're on the 5-minute time frame. So here, 1 o'clock actually opens lower with no top wick, and it taps into that CISD from the 5-minute. Right, and it sweeps these lows again. So we revisit that area and then we push up. And guess what? This is also a CISD right here, changing the state of delivery because we've been going down since lunchtime, and then boom, we tap it right there perfectly. Okay, so if you're not comfortable taking it here, you can take it there. And this was beautiful. As you can see here, we come up and revisit this high and sweep it there. Okay, very, very nice price action here, but you can see how we break it down in consolidating markets as well. So let's go to the reversal area so I could show you guys how we can break that down as well. Actually, before we start up here in the reversal area, I want to show you guys one more because we don't know if this was a consolidating market until, we're just going back and forth right here. So we're going to bring it back over here and then do another example somewhere over here. So you can see that how we're just consolidating in this area now. So what we want to do here is, you could tell that this here is a change in the state of delivery on the daily time frame because this candle closed above this candle's high right here. Okay, so let's go to the 1 hour. Let's see what we can find on the 1 hour. So we can start fast forwarding this, and this is on a Monday. So this is a brand new week right here. So we don't really trade Mondays. But you could see how Monday opens lower. This is New York opening, and now we get a change in the state of delivery right here. And we use this to go a bit higher to go and sweep liquidity right here. So you can see how this candle right here on the 1 hour, right, closes above this candle's high, and then the following candle at 1 o'clock uses it to go higher to sweep liquidity up here. Okay, so let's see what Tuesday does now. Okay, nice. So we still use this candle and we still respect this candle, this change in the state of delivery on Monday, right? Because Monday came down and it swept a bunch of sell side liquidity over here to the left right here, right? Swept this low over here. Very nice reaction. Closed above. We have a change in the state of delivery. We still respect it, right? We can use the whole candle. Oftentimes you want to use the opening price, but all this price action here was during London and Asia session, right? This is where New York opened. So it opened there. And again, we have a change in the state of delivery right here. Okay. You could see how we use that to push up in a consolidating market. Okay. So that's how you use CISD in a consolidating market. Let's go to the reversal point and see how we could use CISD from the daily time frame to the 1 hour time frame. All right. Again, so CISD, we want to use it as a confirmation tool, not a pattern. We do not want to pattern trade this. We want to use it as a confirmation tool. Now, we are at all-time highs right here, or we were at all-time highs right up here. And again, this is a huge series of up-close candles, okay? So we oftentimes want to wait for this. We don't want to try and predict where CISD is going to be. We want to wait for it. That's why it's a confirmation tool. We don't want to predict where it's going to happen, right? If you've been trying to short all this, you're getting wrecked. Right? We don't want to try and predict it, okay? We want to wait for it, all right? So you get a nice displacement here on Thursday, and then we get a daily CISD right there. Using the framework here on the daily, you can see how we respect it here, and now we could use it on the 1 hour, so we can get on side with this move right here. So if we mark out our premium, we go from this low, or that high to this low, we could see that this is OTE. We're in this daily order block that we keep tapping into right here. Now we want to find our change in state of delivery on the 1 hour for this new week here, okay? So Monday starts right here, okay? So we get a CISD right here. Remember, we get a sweep, we get into an area of a potential reversal, and we get a change in the state of delivery right here. Right, series of up close candles. We come up, we sweep previous day high, we consolidate, and now we can start using the premium and discount. We can use it on Monday's range, and you can see Tuesday goes into an area of potential reversal. You can see here how we have a series of up close candles. And again, this is that bearish example that I showed you guys. Series of up close candles. We close below. Look at that, perfect. Then it melts all the way down to our higher time frame sell side. So this is how you use CISD. So that is how you use CISD from the daily to the 1 hour in a reversal signature, right? When the daily is reversing, that's how you would use a 1 hour CISD. You just have to really look for the CISD on the 1 hour once you notice the daily's potential that it's going to start reversing. So how do we use it for a retracement, right? Because over here we retrace there to go lower until the DOL is met, right, all the way down here. So the way you want to use it here, because people probably got tripped up right here when we closed above this, because we have reached an area of discount right here, but it was used to go lower. So if we just go over here and study price action on the 1 hour, so the daily pushed up, right? So you could see that Thursday, let's see, let's find our series of up close candles that made the high. So we would be looking at this one right here, because it did sweep this liquidity here. So if I were to go like on the 15-minute, this was buy side right there, series of up close candles. But you could see it never got a retracement back up into this area. However, you could see how we just changed the delivery all the way back to the downside, right? So if we go to the 15-minute really quick, see, same thing here, series of up close candles, sweeps liquidity, taps an order block, we melt, right? But we never got a revisit back up into this area intraday. So you can see how CISD helps you confirm reversals, right? CISD is a confirmation that price action is going to reverse. Okay, that's what you want to use CISD for. You don't really want to use it for anything else besides reversals, right? It's very good to anticipate a reversal using that daily framework, paying attention to where the daily's at, and then going down to the 1 hour to find your change in the state of delivery. That's the easiest way and the simplest way I can tell you guys how to use CISD for intraday moves. Now, if you want to use it for the weekly, pretty much pay attention to where the weekly's at and then use the 4 hour candles for a change in the state of delivery. That's how you would use it on the weekly for the weekly profiles. But those of you studying daily profiles, look for where the daily candle is at or where the daily price action is at. Find a discounted PDA rate and then use the 1 hour to confirm a reversal or anticipate a reversal from the 1 hour, right? You find that CISD on the 1 hour, and then, you can use the 5 minute, 1 minute for intraday entries to catch, and to be on the right side of that reversal, right? So yeah, hopefully you guys enjoyed the CISD presentation. I know I yapped a lot, but yeah, if you guys need help or have any questions on this CISD presentation, you guys already know what's good. You guys could hit me up in the Discord chat, DM me if you guys have any questions about it. It's very straightforward, and yeah, rewatch it if you need to. But yeah, hopefully you guys enjoyed. I'll catch you guys in the next one. Peace out.